Welcome everybody to today's webinar, leveraging verifications in the POS to lower costs while creating a streamlined borrower experience. Today we have with us Lucas Curtolo of Mutual Omaha, John Hardesty of Argyle, and Pamela Faulkner of Encino, and they are going to provide a wonderful webinar for you today. I believe there is an opportunity for some questions at the end, but if you have questions throughout, feel free to drop them in the chat and we will address them as we can. With that, I will pass it over to John.
Awesome. Thanks, Amy. And thank you, TMC, for putting this on. And a special thanks to Lucas and Pam, two good friends, for joining me on today's webinar. Before we dive in, if you're listening in, we're going to be pretty direct and to the point in true fashion on this webinar. But I want to give both Lucas and Pam a few minutes to introduce themselves, what they do at their organizations, and then we'll dive right in. So, Lucas, I'll start with you.
That's great. Lucas Curtolo, Senior Vice President of Operations. We've been together as a company for 15 years. We've been in Mutual for going on 7 now, and I oversee day-to-day ops and work hand in hand with our COO, Christine Layden.
Awesome. Pam, to you.
Thanks, John. Hi, Pam Faulkner. I'm the Executive Director of our U.S. Mortgage Division for the customer side of the house here. I've been in mortgage for about 40 years and have kind of seen a variation of everything. So great to be here.
Awesome. Well, again, guys, thank you so much for joining. Maybe we can go to the next slide. I want to, we have an agenda today, but we were talking and prepping for this. Going to make a little change to it. And I want to start with Lucas. I want to start with the problem. Today's topic is leveraging verifications in the point of sale. I wouldn't say it's controversial, but some lenders out there say, I don't want to do that. I want to wait. I want to wait. I want to wait. But you, on the other hand, took a different perspective. You said, hey, I want to run these things in Encino, in the point of sale, up front. What got you to do that, and what problem were you looking to solve, in terms of verifications in the point of sale?
I think the number one problem is cost, right? And I think everybody's trying to run away from the biggest monster in the industry because they keep driving the cost up higher and higher and higher. So that was the first motivation. The second one, obviously, was to streamline the process and make things smoother and easier. Obviously, you can gather so much information up front, and the more that you can get up front, the easier things go for both the consumer and faster to close loans. So I think those were the two main driving factors. We decided to put it up front because you're basically it's asset verification, right? You just put it in up front. You're just letting the borrower, as they go through the point of sale, they get to choose. Do I want to put this in? Do I not want to put this in? If they choose to, problem solved, right? Like, you've just not even had to address the situation, and all of a sudden you have what you want. And if they don't choose to, then there's a waterfall in how you want to go about getting after it and seeing how you get that. But we just wanted to put it in the hands of the borrower and just say, hey, you're going through it. See if they choose to do it, just like they do with the asset verification. And it's obviously, from our results, and we can get into that a little bit later, it's gone fantastic. I don't know if you're going to touch on, I can keep going a little bit. I'm thinking about implementation, but you'll probably talk about, I think one of the easiest things, and one of the things that I enjoyed the most when you start talking about technology and all these different things, is what's the implementation like? How much lift is it on our end? What are we going to need to dedicate in terms of resources? How much time? And you guys have obviously done it with so many people that it was just, it was as easy as it could have been. And that's what allowed us to actualize our savings so quickly. But the implementation of it all was just so easy and seamless it's been a huge home run.
And I know we're going to get into obviously implementation here in a second, but Pam, I kind of want to go to you. Obviously on the point of sale side, why has Encino invested so much in making these third-party vendors like Argyle easily integrated into the experience? What's the focus there from the point of sale side? and the problem that you're solving in doing things like integrations upfront in the application.
I think it speaks a lot to the way that Encino listens to the customers. People like Lucas and Mutual have brought things to us in the past about how it makes, a system more cohesive for them up front to keep borrowers moving through the process. It's not just a matter of, decreasing the cost, but it's also enabling those borrowers to have instant gratification, know what they're looking at, know what their results are, and have these integrations up front and available to them. So hats off to lenders, especially you, Lucas, as you identify these, stumbling blocks in your processes up front, bringing that to us as vendors where we can sit down and partner across this and build out a platform that makes sense for everybody across the board.
And we've been early adopters of it with Encino, right? And they've always been fantastic. Anytime we've brought things to the table, they've made it happen for us. They've been a great partner.
And maybe just to take one more step back before we get into results, and I love that this is hanging out there, and Lucas, you're going to talk on cost savings here in a minute, but I want to talk, to the TMC group here about how we solve the problem in conjunction with Encino. And I think it's a good story with how we met Lucas and the team at Mutual of Omaha. Obviously, we had been working with Encino for a long time. I think, I've worked with Encino almost my whole career, but when I came to Argyle, the first thing was that we needed to get our experience, our consumer-driven experience, into the point of sale. And it took about a year and a half, not to just think about your typical data integration, but more or less trying to work with Encino to say, what's the end-to-end flow? And that also incorporates both the point of sale and Encompass. And how can we build that so that Lucas's team, who manages both loan officers and closers, can still interact with the same experience wherever they are in the journey? And that's what we did with Encino. And we tried to think about persona-based, how is this persona going to leverage Argyle? And where are they going to leverage? Is it in the point of sales and Encompass, et cetera? So long story short, we built this integration now, successfully. I think we're up to 40,000 transactions, Pam, in the 6 months that we've built this thing. But then it comes to Lucas and how we met Mutual of Omaha. And I remember talking to you, Lucas, early on in a very direct fashion of, you had two goals. You said, hey, I want to decrease my cost, right? And I want to make things faster. And one of the questions you asked me was, how does Argyle look against the traditional players, the Work Numbers, Experience, et cetera? And my answer in a very direct fashion was, we go to the same places plus more, and we can do it at a fraction of the cost. Almost to the point, I remember, Lucas, you asking me, well, that all sounds good, but we put it into practice. How quick? And so you said earlier, it's 2 or 3 week turnaround time from, I think, when we first met to you get the agreement signed to Pam getting the SOW from Encino, et cetera. So my point is, if you're out there and you're looking at a tech stack and how can you integrate services like Argyle, Encino is great. And I think Lucas is going to share here why, the results of this now. We're about 6-7 months in, Lucas, right? And we
before we get into that, I'll something that just popped into my head. One of the things, there's so much technology out there, right? Everywhere you go, it's AI this, it's AI that. This technology is going to save you this. And I always laugh when somebody tells me, check out our technology, I'll give you the ROI. And it's like, how are you going to give us the ROI on this? You don't know how we compensate our employees. You don't it's just this kind of fictitious number that people throw out based off of generalizations. And when they don't run your business, it's impossible for anybody to give you an ROI. The one thing that attracted me to this was pay per use. Here's your savings. Literally, you can just do the math on, if you have this many orders and you can get this many transferred from the Work Number over here, it's a direct savings on a monthly basis, right? And when you incorporate it into the point of sale up front, it just makes things easier and faster. So, that's why I was so happy when you asked me to come on. I'm happy to do it. It's just so easy, right? It's cost savings, easy to implement, and it's pay per use. You can't really ask, in my position, there's not much more we could ask for from a technology standpoint, in terms of just getting things and making it effective and saving money like instantaneously and making improvements so quickly. So I'll give a little bit of background, because I think I've said it a couple different times on our prep call. I think what people are interested in is what's your savings, right? Like, what's it bringing to the table? We started January, right? Roughly, right about there. 2 months in, and I think it's important to understand the volume, right? Obviously, if people do more volume than us, I think the savings opportunity is much bigger. And if they do less, obviously they're going to need to factor that in as well. But we do anywhere from just roughly 2,000 orders a month. Maybe on a month we'll do 2,500 and then 1,700, but just roughly just say 2,000 orders. In terms of implementation, we've got some different business channels. We've got different offices and some different kind of structures, just like everybody else does out there. In the first 2 months, after the second month, we saved about $10,000 a month. And then the big one, and it slowly ramped up. And I think we finally, in June, it was the perfect timing because we did the exact same number within like 10 units. We did the exact same number of units in June than we did in October of last year. So it was a direct, just like, hey, we did this. Let's look at our orders. This is what we did. And we went back to October, and our savings was, it was just north of $50,000. I think it was closer to $56,000 compared to October when it was the exact same amount. And when I did the math and kind of backed into what we were able to move away from the work number, move over to Argyle, it was just literally A to B. And that was the cost savings right there. And we've got some branches that have adopted it really well. I mentioned it earlier. It's amazing how the P&L partners and people that are impacted where this cost gets passed along to them, how quickly they adopted it. And then where we're having slower adoption is where there's not that correlation to profitability. But the big branches where this is getting cost passed on to them, they've adopted it really, really quickly. And I still think we still have a lot more upside in terms of monthly savings. And then from a processing operation standpoint, like I said, a processor opens a file and all of a sudden they've got verification in their pay stubs in there, and they've got everything that they need. It just makes their job easier, faster. So that's kind of the background. I don't know, did I touch on everything, John, or is there anything that you wanted to follow up on or ask?
No, I think there's so much in this space right now in terms of like facts, right? We're going to save you a boatload of money, you know, the speed component of this. I think what you're articulating is here's an actual use case. Here's an actual case study of you trusted Argyle and Encino to deliver you an outcome, right? And now the outcome, as we're going to talk about adoption implementation, but you see the outcome and we're delivering on what we talked about in January 5th of this year, you know, and we have plans to you know, hopefully expand that. So I just think that's the story here. And that's the story that Argyle, we like to tell. And I'm sure Pam, you as well, is no fluff, right? This is how this can work. And this is how we come to our clients with a plan, and we try to execute on that plan every single time. I know, Pam, if you have anything else to share on the Encino side, please hop in here.
Well, I was going to say, you know, when we first started venturing down this path, I love the fact that, you know, you called me up, we talked about how to get through the implementation. What does this look like? You and I had gone through from A to Z, from the start that we signed the contract to the point that we get it all the way up, live and moving. And we have worked so joined at the hip together, your team, my team, and listening to the clients and what their challenges were and how to get there, how to make this move extremely smoothly, as well as our product team actually took the data and built it where it is easily digestible from either a borrower's perspective or even a loan officer's perspective up front. I really think that the speed of this, and time is money. We all know this. Everything that we do today, and Lucas, you said it so beautifully earlier when you talked about, you know, the savings that you saw. I mean, the more that you can incorporate and, you know, improve your margin, the more you can do, and the more that puts you out front, which I think is pretty amazing. You guys were some of our early adopters on this, and you know, you're killing it.
And the better price you can pass along to the loan officers, right?
Absolutely.
I think that's the hardest part that we're dealing with technology, is just that the price eventually gets passed along. So when you can save like this, it helps from a sales standpoint as well.
The other thing I remember, Lucas, you giving me, or we were talking on once we first implemented about how the first reaction of a loan officer was, "How did I get these pay stubs and W-2s in my file?" It was like a whole different talking about us versus legacy providers. It's a whole different way to do verifications. And when we get that kind of response, that the second that they open it up in Encino or Encompass, and they've got both raw data elements in the ERLA. They've got pay stubs, W-2s. They've got the reference ID for the agencies in there for Fannie and Freddie. It's just like that means we're making good change for these folks, and we're speeding up time as you talked about.
One of the things to touch on too, John. Obviously, I keep harping on cost, but one of the things that the cost was going it's gotten so exorbitant with the work number that we were having to pull it away from sales, right? Because they're just ordering it on every application, and it just got astronomical on us. But when you look at this cost and the way that it becomes so much more manageable, that we're now rolling it back, not company wide, but to specific offices. We've opened it back up to the loan officer. Hey, when you start, if they're not completing this up front, feel free to send them the link. We base that off of conversion ratio. Some branches convert better than others, right? So you look at it from a business standpoint, but in our better offices, we've rolled this back out, and now the loan officers are so happy they can just send that link out from the borrower, and we're not now concerned with the cost.
Absolutely. Maybe one area I think that's really important, Lucas and Pam. I know you guys are doing stuff with Dual US and Encino, but part of this integration that we built was not only cost savings, not only speed, but the agency side. How making sure we're always pre-populating fields. We're helping you run DU or LP as soon as you get the file in. To see what it spits back, et cetera. I'm probably, this is again off the agenda, but Lucas, like any feedback from your teams on how that has helped in terms of just getting those into DU and LP and that side of the integration itself?
I don't have anything specific, but sometimes I always say when there's no noise, it's good news, right? If I don't hear from you or I don't hear about you, things are going great, right? And I think that the proof that that's helped is the adoption. And you can look at it not just from a sales standpoint, but obviously every month you guys give us an order of who's ordering what and how it's being ordered, so we can see if it's coming directly through Encino or if it's coming directly, if they're sending the link out on their own. And you're seeing processors utilizing it a lot, which is proof in the pudding, right? That's the proof right there. And you're also seeing the loan officers, like I said before, sending it out up front. When you get adoption as quickly as we've gotten in the branches that, again, are tied to profitability, it gives you all the proof that you need in terms of speed and effectiveness.
Totally. Pam, anything else to add on Encino's kind of vision of, the agency approval in Encino?
I think Lucas just hit on that. It's the speed and the efficiency. Having those certifications up front, up front what you're facing. There's no gotchas when you finally get to that point that you're getting closer to the closing table. Everything is already verified up front. And I think Lucas can attest to that. That's what they're seeing now by having all of this stuff available up front.
And that's the key, in my opinion. All the technology that's out there, and I won't mention, but everybody knows everything that's out there. And AI is transitioning this, and they're going to do underwriting, and they're going to do that, and every time you analyze something like that, it's just driving your cost higher. And this is technology that is an instant impact, and also it gives you everything that Pam just mentioned, and it also saves you money. It's just such an easy win. It's low hanging fruit, and it's so easy to implement. And I don't need to sell it for you. I mean, that's just what we've that's what we've experienced, and that's why when you asked me, would you do it, I said, yeah, no problem.
Yeah, and what makes me, I think, anyone on the Argyle side of this is that the most common question. I mean, I've been here since we brought this product to market in 2022. Was, is anyone actually going to go through this experience, right? And then we rolled out an Encompass, and we're seeing a bunch of transactions. Now I look at you guys. You're converting in Encino, which is in the app, self-serve for the most part, right? Yeah. You're converting at almost 50%. Means of 10 borrowers that go through it, 5 of them are hitting this experience, and you're saving 60 to 80% of costs against the work number. To me, like from our ROI, that means we're delivering, and the experience is working. So So I just wanted to share that as in terms of conversion. Does it actually work? I think you're highlighting that.
I think one of the things to touch on, John, when it comes to
Yeah.
that in terms of adoption, and that's, the point of sale part is easy because the borrower chooses to do it. The part where people will have to do a little bit more work and encouragement is to get, if it doesn't come through Encino, to start through Encompass and send that link out. And it sometimes requires them to pick up the phone. Now we've standardized it with templates and stuff like, hey, this is what we need you to do. But that is a little bit more of a heavy lift, right? Because you have to change habits, and processors, for the most part, are creatures of habit, and they don't want to disrupt their flow. One of the things I think once we took off pretty good, and then it kind of little plateaued, and people weren't as listening as much, right? Because it was the same message for the 4 or 5 months, and I think, I don't know if it was March or something like that, I basically threw out an incentive for our processors, whoever increased their percentage the most, and all of a sudden, and they got it. But I think that's one thing that people need to understand. There's the point of sale side, and then changing the habits of primarily processors or whatever people use to order these verifications. It does take a little bit of work and encouragement to change that habit.
But
Absolutely.
At that point, Lucas, not to cut you off there, John, we've seen other folks in the industry who've gamified it out there. And we find that, loan officers that have actually seen borrowers self-service up front, they will start asking the other loan officer, how did you get to the closing table, a day earlier, 2 days earlier, 3 days earlier? And when they start to share it, then we watch the gamification happen about who's going to be on the leaderboard. And we've seen what it does to drive, the money's, returned to them at the end of the whole process.
Yep.
I think one name, Lucas, and I don't know, Pam, I guess you guys both know, but someone like Rowdy Harris on our CSM team, right? The amount of time that we spend with our clients from an Encompass standpoint to say, here's the talk track, here's the LO talk track versus the processing talk track, even the closing talk track, right? And maybe this is to the folks on the call, but if your vendor partners are not talking about adoption, and I dropped Rowdy because he's a former originator, he's a former processor. So like him going and saying, this is how this can work. This is how you should think about talking to your consumers about this or your borrowers about this. It goes a long way. And we lean into that at Argyle in terms of adoption and you guys seeing success. So it's a great call.
I don't want anybody to be disappointed if they decide to go with you and they don't get Rowdy. So I don't want to talk about this, but he was instrumental. I mean, just so effective. Our calls, and I think this is another thing that just popped into my head. Our calls were 30 minutes once a week for 3 weeks, right? And then we moved it to every other week. It wasn't this, we need an hour on Monday, an hour on Thursday, then we have to set aside it was literally 30 minutes, bang, here, 30 minutes every Thursday for 3 weeks. And then it was status. He did a phenomenal job. Hopefully everybody is as good as he is. But he did a fantastic job.
They are.
All right. Well, I know we've got 5 minutes left. Let me, very good discussion, Lucas and Pam. Obviously, thank you again for hopping on here. Let's see here.
I can't see the chat. Do you see any questions in there? I don't know.
We do have a question. Can you see
I
that?
I can't see the chat.
So, someone has asked about using Encino and Finicity to get VOIEA during application, but are struggling to get away from using the work number and truly save money. Underwriting adoption has been a struggle, and they want to know what are your relationship and Finicity, since you've made the announcement here recently about that partnership. What would that look like? And could you explain that a little bit deeper?
Yeah, of course. So yeah, we have a really good, we just announced recently a really deep relationship with MasterCard, where now not only, Luke thought about our VOIE solution, but now we've brought to market the ability to throw in MasterCard's VOA solution into our offering. And, we are really, hear me okay?
Yeah, it faded out a little bit right there, John.
You guys got it. Okay, good.
Yeah, you're good.
We partner with Finicity. We offer their services through Argyle. We've actually onboarded over 27 clients to our VOA solution in just about a month, and couldn't speak highly enough about that product. So if there's individual questions, I'm not sure who asked that. I'm happy to talk after the call. But we have a lot of clients transitioning again to a lot of the reasons Lucas talked about. We focus on adoption. We understand the consumer experience, and now we're just bringing in the asset component as the industry is going that way as well. We're going to be right there with it. So I hope that answered the question.
Great, thank you. I don't see any other questions. Last call to the audience. If anybody has any questions for John, Lucas, or Pamela. Okay, Griffin says, thanks, John. That was my question. If you could reach out to me and I will get you his email address.
Well, again, I just want to thank TMC, Amy, and Melanie for putting this on. And then again, thank you, Lucas and Pam, for hopping on and telling your story. And both great partners of Argyle, and obviously can't wait to continue to share our story to the TMC network. So with that, Amy, I'll pass it back to you.
Awesome. Thank you so much, John. Great webinar. Thank you, Pamela and Lucas, for taking the time to support John and our network. Everybody who's on the call, no worries. I will send out the copy of the recording. So if you missed anything, you can go back and check that out, pass it on to your friends. If you have any questions, feel free to reach out to John. I will provide his contact information in that email as well. And with that, I wish you all a wonderful Wednesday afternoon and great rest of the week. Thanks for joining us.
Thanks, guys. Appreciate it.
Thanks, everybody.